Folks, in for here, the rate update. Today is February 16, 2022. I apologize. Yesterday's videos were terrible. So you have my apologies. It was I went fast through the things. The video was bad. And there was a lag and so forth. So I apologize to you guys about that. So today we're going to talk about what's going on this morning with Russia, the markets, oil, inflation numbers, and everything. And we're going to try to do it within 5 minutes. So don't go away. Okay, so what we're going to talk about right now is what the Fed's going to do and my thoughts on that. What the economic calendar looks like for today, some numbers that came in for disposable income, because I want to just give you my take there, and then we're going to talk about the interest rates later today. And I apologize about last night's videos. Again, I kind of botched those, but I'm going to go over some unique programs in more detail than most people even think about, because why the demand right now is huge for that. So that being said, let's get on to the news. Analysts. Hot inflation fuels case for big bang federal rate hike in March. Okay, so let me explain this. What the Federal Reserve is going to do, their tag rate, or the rate that they control, which is the federal funds rate right now, is between zero and 0.25. Okay, the expectations are they're going to increase it at least a quarter. Now they're saying it's probably going to be 0.5%. So what does that mean for you guys? Well, it's going to make credit all across the board more expensive. Okay, we've already seen that in the mortgage market, because the news about the Fed, what they're going to do, kind of trickles, or like I always say, when I always say, the numbers are already baked in. When the Federal Reserve basically comes out and just tells us things, everything reacts. And then they actually, once they do it, a lot of the markets stay stagnant or maybe might get better, such as mortgages, and a lot of other credits like credit cards, consumer loans, and things like that, car loans and such. Those rates will go up, okay? But the Federal Reserve, like I said before, they do not control specific interest rates. All they control is the federal funds rate. So check that out and Google it. You'd be pretty surprised on what's going on there. So the next part of the news is what's the economic calendar for today, and let's dive into that for you. So you're going to see yesterday we had the PPI, which came in at 1%, which is double what was expected, and the markets did react somewhat to that. President Biden spoke, and then today, here's what we have. Core retail sales, they are up huge, okay? And I'm digging in on this because right now I'm going to show you something in a second. This isn't correlating with what the markets are doing. Just weird there. Retail sales month over month came in at 3.8, pretty robust number there. Crude oil, we're going to get the inventories there. This is going to give us a signal of, what's going to go on with gas prices. So all this is focused in on, basically what the Fed's decisions are going to be. FOMC meeting minutes, we're going to get that at 2 o'clock today. It's going to basically give us a little bit of backdrop, or kind of a little bit of insight in what the Fed's going to do. And then Thursday and Friday, we're packed with a lot of building information or housing numbers, like building permits, existing home sales. And then also on Thursday, we get the infamous initial jobless claims report. Okay, so that's what's coming up. So right now we're going to talk about this disposable income. This is why I think inflation is really, really, really hot. People still have excess cash. That's going away fast. So that's my take on the inflation front. And we're going to watch this. I've watched this meticulously because this is one of the Federal Reserve mandates. So let me go over what the MBS is doing right now, just because it doesn't really make sense. This number right here is up 11. You can't see it because it's in green. My apologies. So what I'm going to do is go over to this MBS chart. You're going to see it's up 14. Okay, so when I go back and see the headline numbers of where in retail sales and everything are, that would give me an inkling that, okay, the retail sales are up real big. So what's going to happen at that point? Well, the Federal Reserve's probably going to say, okay, maybe we will push everything up 50 basis points. So there's a miscorrelation here. So I'm missing something that the markets might know that I don't. So this is what I'm going to watch. But I'm looking to lock in people right now because there's a discorrelation between things. So I'll monitor that. So if I see the markets go big one way or another, I'm going to make a reaction. What I mean by that, if I see rates spike, I'm going to lock everybody in. Okay, if I see that we're teetering, getting better gradually, I'm just going to sit on the sidelines for you guys and wait. Okay, so that's one of the things we do for you. We don't only just take your application, educate you guys through the mortgage process, we also pick timings on when you should lock, like your financial advisor should do. Okay, so that being said, let's get on to where mortgage rates are right now, because that's why you come here. So we see mortgage rates coming in right now. We're going to focus in on this cell right here. I like to do sell by cell so you guys figure this out. Not sell by sell, but I go through the first one in detail and then we spread across the globe there. We got the 30-year fixed coming in at 4.12, up 2 basis points. That's what that number right there means. But then you go down through here and you're going to see it comes with 0.4 in points. Okay, so you have to pay to get that rate. So one of my viewers comments every day, he thinks rates are going to get to 4.2, but we got there if you take out the points. So kudos to you on that. All right, so let's back out. And now we get the 15-year rate coming in at 3.35. Guys, let me reiterate, these are not my rates. These are rates that Mortgage News Daily surveys all over the country, lenders all over the country, they reply, and then it comes back and they post this. I'm a broker, so I work with over 130 different lenders, so I help you find a mortgage out there. That's what I think I'm going to do the video on. Me versus the banks versus maybe Lending Tree and stuff like that. So I'm going to explain that tonight. The 30-year FHA is 3.75, no points. You can see all across the bottom, we hit 52 weeks highs all the way across the bottom, except for the 5-year arms or the arms in general. So again, we go back to 30-year FHA/VA is at 3.75, and you can see down here that comes with no points as well. The 30-year jumbo rate that they're posting is 3.55, up 1 basis point, and the 5-year arm is coming in at 3.73, up 1 basis point. Okay, this spread is basically, we'll say we're there. So we're going to start quoting you guys when we respond back what our arm rates would be. And then we're going to, before you say no, let us educate you on exactly what you're getting into. You might be surprised. So if you have any information or you know about a mortgage that you're looking at or for, please reach out to us. The best way is go to our website. It's therateupdate.com. What we can offer you is reverses. Okay, we're huge on reverses. If you're in a construction process or phase right now, reach out to us. Yesterday, we just came up with a program that allow you to lock for 270 days. That's a long time. You know, before that, we could lock you up to 180 days, which is 6 months. So we extended that out to help you guys. And there's a lot of options in the background there. So because if we lock you in on that long-term rates, just so you guys know, if rates drop, we can do a free float down to the current rates right before we close on you. So it's basically insurance policy. Think of it as you lock in now. If rates go up, you're locked in. If rates go down, we can float you down. It's kind of a no-brainer. I hate that word, but I'm just going to say it. So how do you reach out to us if you're needing help? Well, one thing, if you're in the mortgage process right now and you have a loan estimate that goes over all the details about your loan and what the rate is and all the fees, email that to me. Email it to Dan, D-A-N, at therateupdate.com. I'll review that probably within the hour and get back with you. We can find you when we scan the whole country with over 130 lenders. So to reach out to us for questions, advice, just to kick the tires and see what options are out there for you, please do me a favor. Call us at 844-775-5626 or click the meeting tab. You open up a calendar, it'll give you the days and time we have available. And then, or otherwise, you can just click the apply now button and you're on your way. What'll happen is it'll take you about 5 to 10 minutes to complete the application. Based on the answers to your questions, it'll say, here's the data that we need from you. Upload that data into the system. It's a secure system. So when we're reviewing everything, we can review it and then call you to go over all the details that we have and what we think best fits your needs. So God bless, guys. Thanks for watching. Please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you this afternoon with brokers, banks, or Lending Tree. Which one is best for you?